Okay, thanks to the speakers. I think it's fair to say there's pretty wide agreement on the diagnosis of the problem, that there is a high degree, unacceptably high degree of income maldistribution. There is a very high degree of political polarization that both helps cause it and is an effect of it. And so I think, at least at the broad level, it's fair to say there's pretty widespread agreement on those elements. What I'd like to ask the speakers to do is to comment on each other's proposals for what to do about it. Robin stressed Keynesian fiscal policies. Jim stressed political variables, trying to avoid what he called the oligarchization of the American political process with its erosive effect on our inclusive institutions. And John stressed the need to re-regulate and maybe shrink the financial sector as part and parcel of the solution. So let me ask each of the speakers to comment on each other's proposals. Do you view them as complementary? Do you view them as competing? Should they all be together as part of a package? And particularly, do it in the context of Carmen's assessment that whatever policy does, we're in for a prolonged period of inadequate economic growth, high unemployment, and there's really, I'm reading words into what she said, not all that much policy can do about it as you go through the lengthy process of deleveraging. So let me ask each of the authors to comment on that in whatever order you would like. Carmen, you want to start out?
Well, I do want to say something about policy in the context of deleveraging. Some of you may know that I have recently been talking a lot about the theme of financial repression, which unfortunately has a very negative connotation, but it's an old term that's been batting around for decades. And it's essentially, financial repression is a system where you have much more regulated financial markets. You have the aim of keeping nominal interest rates low and stable, and very often what you see during financial repression periods is negative real interest rates. Monetary policy in those periods tends to be more accommodative, creating more space for the fiscal side, a little more tolerant of higher inflation. And I'm not describing something that hasn't been tried or something that's only been tried by emerging markets. I am talking about what characterized, importantly, the advanced economies during the Bretton Woods period, from 45 to 1980, before we went on the financial liberalization binge. I would like to point out that in my early work on financial crisis with Graciela Kaminsky back in the mid-1990s, we were already arguing at that time that a significant predictor of financial crisis, of banking crisis and currency crisis, was actually financial liberalization. So, in a nutshell, what I'd like to put on the table is that if private deleveraging, public deleveraging are both sluggish and painful processes, we're in for a period, I think, in which monetary policy is not powerless to make the process smoother, if not, I would argue nothing can make for very robust growth in this circumstance, but certainly can prevent the meltdown that we saw in the 1930s, where the policy on the monetary side was characterized by very high real interest rates, by adherence to the gold standard for an extended period of time, and by essentially monetary policy making the problem far worse. This is not a ringing endorsement of financial repression, but it is, I think, something that we have to think about. And we also have to think, and this is an area that now I'm speaking to an issue that I really haven't studied yet. Financial repression is a tax. It is a tax on savers, and it transfers. It does involve transfers from savers to borrowers. That's why, including government borrowers, which is why it smooths out some of the pains of deleveraging, if you will. But anyway, I'd like to throw that out there as an issue for monetary policy going forward.
Right, so add financial repression to the list of policy options for the rest of you to comment on. Robin?
I want to actually thank you for letting us comment on each other's, because I felt after I sat down after my talk, I was remiss in not acknowledging the truth of what Carmen was saying about the origins of the particular manifestation of this crisis of being in the global imbalances. And after all, Ken Rogoff was my thesis advisor, so I know that. Okay. So, and I want to share with you, I was just at the INET conference that John mentioned in Berlin, George Soros' conference, and Joe Stiglitz was there, and he was the sole person who talked about the global imbalances as being an originating factor. And we talked briefly, and one thing that has also puzzled me, and what he mentioned, is the United States' long-standing passivity in the face of the global imbalances of being the consumer of last resort in the global spending scheme, and what had accounted for that. And what he told me was that, well, there was a good story which the Reaganites told, was that, well, people just wanted to invest in our vibrant economy. And so, and it was just the result, the twin of the fiscal deficit. And he said that what they found out by looking at timing was that it was actually the other way around, that it was the global imbalance that was driving depressed spending in the U.S., depressed consumer spending, and therefore the fiscal deficit was actually absorbing some of that. So I want to acknowledge the truth of what Carmen said about we need to look at the global imbalances, and I think that I'm probably in a place that's pretty friendly at making that statement, and we need to come up with some ways of dealing with that, because it doesn't look like it's going away anytime soon. Now, what we saw, I think, in the United States was when you have the global imbalance, this huge inflow of funds, exactly who gets the hit. In the United States, we have a system in which those who are worse off get the hit. And it doesn't have to be that way, but that still is not fixing the fact that we have the global imbalances. I do agree with the view that we need to shrink Wall Street, that we can, if you want to call it a tax, if you want to say, it's in the pursuit of efficiency, a second best, whatever. I think that that's right on. I think that there are ways that we could have dealt with this, and we should seek to deal with this, such as deleveraging, of course, fiscal policy. I and Paul have been a long advocate. We had an article in the New York Review of Books now a year and a half ago talking about principal write-downs. Why can't banks, Fannie Mae, Freddie Mac, do principal write-downs? This was done back during the Great Depression when we had a huge private debt overhang, and of course what happened this time around was that a very poorly designed HAMP program from the Obama administration, which would try to tempt the banks into doing this. Well, 2 years on, and after much failure and people in extreme distress, the banks have finally figured out that they get more money in the end by writing down rather than forcing people into foreclosure. So again, we see an instance in which what straightforward economics was hampered by the political. So as far as, I'll just end about can we prevent ourselves from being oligarchized in the political system? I certainly hope so. And I think we may very well know in a few months' time.
Just a very quick response on the global imbalances. You're right, of course. This is an institution that has said a lot about that. One reason we've said less about it lately, and I certainly took the view that it was an important causal element in the onset of the crisis, among other things, it made it very hard, if not impossible, for the Fed to tighten interest rates when it finally tried in about 2004, 2005. The huge influx of foreign money just kept monetary conditions very loose, kept interest rates very low. I always like to say the Chinese did not force us to make stupid subprime loans, but they helped make it possible for us to do so, and we took full advantage of that. One reason we've not said as much about the imbalances lately is that they've come down a lot. The U.S. external deficit's been cut in half. maybe going back up a little bit, but our best projections suggest it won't go up too much more. The Chinese surplus, of course, has come down hugely from 10% of their economy to now between 2 and 3. There's a big debate whether it'll go back up or not. Again, our own projections show maybe not too much. But having said that, I did an op-ed in the Times last fall that said the U.S. is missing a huge bet. Why should the U.S. continue to accept a large current account deficit at all? We've run them for 30 years. We have supported export-led growth in almost the entirety of the rest of the world. Everybody else now wants export-led growth to get out of Carmen's prolonged turn down. But why should the U.S. be willing to go on running a big external imbalance, even at a lower level, when if it could eliminate it, it could create easily 4 or 5 million good new jobs and increase the growth rate between 0.5 point and 1 point a year if it could phase in a correction over a 5-year period. So if we would get serious about putting our external books in order, it would certainly help in dealing with all the things we're talking about. Okay, Jim.
So I guess my perspective is rather different from the other panelists in the sense that there's a lot of discussion of kind of short-run economic consequences of the financial crisis, which I'm sure are real and enormously important for kind of welfare. But my guess, my sense is that in the long run, that doesn't really influence very much the prosperity or the prospects for the US economy. The economic growth is driven by innovation and technological change, by investing in human capital, and those processes are kind of what's really crucial for the long-run health of the economy. So I guess there's a very different focus here on the short run and the long run. And when I think about the financial crisis, I think about it very much the way that John talked about it, which was, this was the sort of, what political scientists would call critical juncture that sort of galvanized opposition to this particular set of economic institutions or policies or whatever it was. But I don't think that the issues are really at that, the real issues are really at that level. I mean, that's why, I didn't talk about the direct effects of inequality, of economic inequality on the economy either, because I don't think the prosperity of the last 20 or 30 years has been completely a chimera either. There has been economic growth in the US and there have been rising living standards. Of course, it's been distributed in a very inegalitarian way, which is what people are complaining about, but the average growth rate has still been positive. So I don't think the prosperity of the last 20 or 30 years is an illusion. The problem is whether or not that can be sustained. And I guess our sense would be that's not so much dependent on how you deal with the short-run problems of unemployment, and although those are real and they have big consequences for welfare, it's really about, can you maintain these institutions that have made the United States so economically successful over a very long period of time. And that's why we emphasize very much the politics. For example, the financial sector. The financial sector, should be regulated. Fine, but why is the financial sector deregulated? Because people in the financial sector are able to influence politically the people who create the regulations. So advocating changing regulation without changing the political relationship between finance and the politicians does nothing. It won't alter the fundamental situation. If you go back to the progressives and the populists, what did they do? They demanded political change. If you go back and read Woodrow Wilson's book, The New Freedom, it's all about, worries about oligarchization of the political system and inequality and how this has to be fought against. And, those days it was Rockefeller and Carnegie and Mellon and Cornelius Vanderbilt and people like that. I don't know exactly who the contemporary people are like that. And I do think this is, it's not just about the financial sector either. If you look at, for example, CEO pay went through the roof everywhere, not just in the financial sector. It went through in the real economy, in manufacturing, and everywhere. It's not just about the financial sector. So that's I guess there's a different perspective. There's the short-run perspective, which is important, very important, and there's the long-run perspective. And I guess from our point of view, to keep the long-run health of the economy going, that's where political reforms are really crucial in terms of, and it's really crucial to kind of identify what the political problem is. So there's very different opinions about what the political problem is. Is it the fact that there's too much money in politics and money is too useful in winning elections? And so what's the progressives and the populists came up with a very kind of incisive analysis of what the problems with the political system was. And they came up with very good solutions for that. And that's, I guess, where I would say the thinking needs to be done.
John, what's your take on your co-speakers'
Well, obviously,
points of view?
I support financial repression, although it's not a great slogan. So I tend to avoid it. Actually, it'd work well at an Occupy Wall Street event, I guess. And I also support doing whatever we can to alleviate inequality. I mean, James's presentation, I think is fascinating. This because it raises this question of sort of what's the best way to promote political change, given that, from the institutional perspective, economic prosperity is ultimately dependent on the quality of the institutions. And I think the analogy to populism and progressivism is very apt. I hadn't really thought about it in that way. I'd sort of thought about it in terms of John Kenneth Galbraith's old sort of theory of countervailing power. The banks and the 1% and the big corporations have got enormous power and access to power, given the way the American political system and the campaign contributions are organized. So, what's the countervailing power on behalf of the people who haven't got that access? And again, it sort of puts me in mind of a famous British historian who described early 19th century Britain, pre-1832 Reform Act, as oligarchy tempered by riot. So riots can be useful in a way. We might need a little bit of that in the US. I'm not advocating full-scale violence, but I mean in terms of direct action, people out there on the streets, just look at how the political debates changed in the last 6-12 months since Occupy Wall Street got going. Would Obama really be proposing this Buffett law now if those guys hadn't been out there on the streets in New York and Berkeley and places? I don't think he would.
Okay, let me open up to questions and comments from the floor. Either aim them at a specific panelist or to the group as a whole. Identify yourself. Traveling mic will come around. So standing mic in the back. Jessica?
Thank you. Jessica Matthews, Carnegie Endowment for International Peace. I wanted to ask Jim what on earth he found to be optimistic about in the context of his analysis, because it seems to me you've got it exactly right, and that, I'd never used the term oligarchization, but we certainly seem to have arrived at a political cul-de-sac from which neither party can extricate itself because they are equally dependent on money and on a lobbying industry that exists to funnel money from increasingly powerful political and economic interests into what are essentially bottomless needs for members of both parties to get reelected. So if you've got a situation where both parties, as different as they are identical in this respect, and I think they are, and you see the results kind of across the spectrum in the number of issues of major consequence that have not been addressed in a quarter of a century in this country. Energy policy, healthcare, you can go on. Climate, end of the Cold War. I think at some point you have to argue that, in fact, we have oligarchized ourselves, that we have lost the capability to walk out of this cul-de-sac. So where is the reason for optimism in this?
Okay, let's take a series of questions, and then we'll come back to the authors. Lee.
That's a perfect prelude to my question. I'm Lee Price, and you talk about the really important thing is to make sure that our economy is structured well, so that we are educating people and creating infrastructure. Well, we've had impasses in both not just the federal government, but in state governments in dealing with those basic issues. Because of high-income people not wanting to be taxed, we are starving government at all levels from being able to deliver decent education and decent infrastructure, as well as other things. So I'm not sure where the optimism comes. You implied, I don't know whether you intended, to suggest that, well, the real problem will be in the future if we let this income inequality lock up our political system. But don't you think it's already started and we already see evidence of this problem?
Patrick, just right behind you.
Yeah, Pat Malloy. I was on the Senate Banking Committee from '83 till '97. So here's what I saw, and I just want to. There was a change in corporate governance. There used to be the shareholder theory that people have responsibilities to other than shareholders. And then when that morphed and everything focused on shareholders, then you really saw the globalization push and the outsourcing really get going. So those two are very much related, and the imbalance that Fred talked about. And why are we taking that? Because some people in this country are making a lot of money out of doing it, and they control the political process. So those three things are interrelated: the corporate governance, the globalization, and then the capture of the political process by the increasingly moneyed interest.
Yep, over here.
Thanks very much. Stephen Percy from the International Labour Organization in Geneva. And I'm here for the G20 meetings and the IMF meetings. I have a feeling that a lot of those people would like to hope that there's a more, this time can be different. And I was sort of hoping that maybe the panel would, give me some ideas. I took from Robin that we needed to have a reversal of the polarization in income distribution, in politics, and in academia. And I took from Jim Robinson that we needed inclusive governance. And I took from John Cassidy that we needed to re-regulate finance. At the end of it all, I couldn't help recalling, partly provoked by the quotes in Robin's piece, the famous Keynes paradox of thrift. But this time, it's the paradox of thrift in a world where capital markets are open. So do we have a global paradox of thrift? In which case, does it all have to be not just the US, but a lot of countries doing things together? I mean, how much can the US do on its own? I mean, I'm sure the rest of the world would like the US to move, but don't we need to organize it a bit better? So in the end, my question perhaps is most directed towards Jim, and that is, what do we need to do to have inclusive governance of globalization? Can you do redistribution in one country these days? Can you do re-regulation of finance in one country these days? Thanks very much.
Yes, question back here. Yeah.
Hi, my name is Rebecca Nelson. I work at the Congressional Research Service. I had 2 questions about the Occupy movement. First, why do you think it took so long after the financial crisis to get a reaction against the financial sector like we saw with the Occupy movement? And then second, it seems like the Occupy Wall Street is a very small segment of society, and a lot of the panelists touched on how prevalent inequality is and how it's sort of been a long time developing. So why don't we think there's a more broad-based reaction against the inequality that we see that I think the Occupy Wall Street movement is tapping on?
Okay, yeah.
Alessandro Pio from Asian Development Bank. We just released a report where we were worried because rising inequality in Asia meant that the top 1% had 6 to 8% of the income. So the data that showed us clearly makes us feel better. But one of the main reasons behind the rising inequality in Asia is inequality in access to markets, access to assets, access to education. And it seems to me that perhaps one of the reasons for the Occupy reaction is access to the political decision-making and access to the solutions that are being proposed to the crisis. I think that was one of the reasons behind it. But then my question to you would be, in a situation like this where monetary policy is as expensive as it could be, there are limits to what fiscal policy can do. It seems that the key answer is in reallocating resources internally in terms of redistribution and reallocating resources internationally. But if the political situation is constrained and if the market decisions are the ones that decide who gets the resources and what the resources are used for, how do you see a solution to that? And how do you see a solution that is not purely based on growth? Because there is limits based on sustainability in terms of what the resources that growth requires. So how do we factor the sustainability environmentally into the kind of solutions that you're proposing? Thank you.
Okay, any others? Okay, let me come back to the panel, and I'll go this time in reverse order. Try to answer all the questions put to you in a couple of minutes. John.
Okay, I'll tackle two of them. The first one on shareholder value, I think that's a very good point. I mean, clearly corporate governance and the rise of the shareholder movement and decline of the sort of stakeholder idea really did not just affect Wall Street, but the entire corporate sector, and is obviously inextricably linked to the massive pay at the top of the distribution. I mean, if you look at that chart, the Piketty-Sayers chart, it really starts to pick up at the 1% in the early 80s. Now, obviously, these are pre-tax, remember, so we're not talking about the impact of the Bush and Thatcher tax cuts. It's pre-tax income. So what caused it? I think the most, easily understood and probably accurate answer is the proliferation of stock options and big shareholder packages at the top of the big corporations, and that obviously had and has had an enormous impact ever since. So it should always be considered part of it, definitely. The second one on Occupy Wall Street, why did it take so long? It didn't actually take so long, but it started out on the right, the sort of reaction to the, America, there is this sort of residual anti-government feeling in a lot of the United States, partly, well, what causes it, I'm not qualified to say, but it is out there. So, the Tea Party was partly a reaction against Wall Street, but it was the reaction against the government bailing out Wall Street, rather than the actual sort of sins of the Wall Street guys themselves. I think the fact that the Democrats then took over the government and were had the job of, fixing this horrible mess, that sort of stymied things on the left for a while, and people had to decide, did they support Obama's approach, did they not support his approach, etc. And then sort of Occupy Wall Street came in the second wave after that. So I think there was a pretty, quick reaction. It just started out on the right. That's pretty much it. I'll leave the rest.
Jim?
Yeah, I mean, optimism. I'm optimistic because, one reason I'm optimistic probably is because I do research in very, very dysfunctional countries most of the time. So, so when I get off the plane back from the Democratic Republic of Congo and I get back to Boston, I'd breathe a huge sigh of relief. But also, I think if you look historically, the U.S. has been very good. The U.S. political system has been very good at dealing with challenges. It's been very robust to challenges. That's why I talk about the progressives and the populists. Or you could think about, the 1930s, or think about Roosevelt's court packing plan. Or there's, I think, the political culture. That's not a word I use very much, actually, like optimism. But the society in the U.S. is very robust at trying to deal with these problems. So I think that's why I'm optimistic, and that's the kind of the lens through which we try to talk about Occupy Wall Street. I quite agree with the lady's point about, well, how big is this? How important is that? And I think that kind of remains to be seen. But I do think that's why I think this is healthy. That there's pushback from society. This is a fundamentally very democratic country. And it may be that money has captured the politicians and stuff, but political rights are very broadly spread in this country, and they're very actively used as well. So I see the possibility for reversing that. Has the real problem already started? So it could be that there's all sorts of problems with the U.S. government and the education system and other things. But I guess I think much more about. The government is very important, but I guess I think much more about the private sector. I don't see it when I look at the private sector in the U.S. that there's some enormous change in the structure of things that would undermine the dynamism or the creativity of the U.S. private sector. So maybe I'm wrong. Maybe the rot has already set in. But I don't sense that when you look at as I said, if you look at the growth. You look at the path of economic growth, yes, there's been this massive increase in inequality, but there's still productivity innovation going on. So I guess that's the basis of that's the basis of that claim. As for globalization, can these things be done independently, or do they have to be coordinated? Or I'm not sure what the answer to that is. When I've in my research on sort of political dynamics and political change and political development, trying to understand development of democracy or development of state institutions, I always come back to thinking very much about the internal dynamics of countries. And in places I've studied in detail, I've always been struck by it's much more to do with the domestic politics and conflicts and their resolution. That's the sort of the real first order thing for trying to change stuff. And so I've never been, I know I'm sitting in the Institute for International Economics, but I guess I've always been a sort of autarkic sort of chap.
Robin.
I'm going to come to Jim's defense, surprisingly, about optimism. Well, the question is, how can we have optimism in the face of money-driven politics? I think it's a very good question. But as I said earlier, I do think that this is coming to a watershed election, and a lot of times what you need to break a logjam is a big push. And we can hope that that's what we'll get. One of the kind of perverse but kind of schadenfreude moments is the fact that Wall Street has actually turned against the Obama administration. That in the past, basically all of industry lined up behind the Republicans except for Wall Street. And many have believed that part of the reason why we got the deregulation that we got during the Clinton years was because Wall Street was a steady source of support for the Democrats. Well, that's gone by the by. So, you know, we can only hope that the Democrats are able to tap into a deeper, broader, more, you know, for a hackneyed phrase, grassroots source of funds to actually, and I think that's happening. I think that's happening. If you look at the statistics about the fundraiser, it's actually true that Romney's people are maxed out at the 2,000 limit already. And Obama has a much wider, deeper, broader base of support that he can tap into. So I think there is, you know, some support for the fact that that over time that we will overcome this. Corporate governance. That's again a place where I want to say that I think the economics profession, and particularly economics profession that was in business schools, were really remiss and practiced some malpractice because they gave, now perhaps they couldn't have stopped it, but they certainly gave intellectual cover to it. That the maximizing shareholder wealth and making sure that CEOs got a full complement of stock options was de rigueur in the syllabus in the graduate classes. Do we have a global paradox of thrift? Yeah, I just came back from Berlin, and it's pretty awful over there, and we seem to be exporting austerity to each other. I think that says even more so that we need to deal with the global imbalances, and that we certainly do need to approach financial regulation from a global point of view, particularly with the British. And finally, why did Occupy Wall Street take so long? You know, on the one hand, I think one can never say when a match is finally going to be lighted, but I do think that was partly strategic. We wanted to give the Obama administration time, and people were reluctant to criticize. And then finally, they realized they had to take matters into their own hands. And I think that I agree that he has changed. I agree with what John said, that he has been moved to the left because of that. Okay.
Carmen.
I want to follow on the issue of globalization. Globalization is endogenous and it's very much policy driven. What do I mean in English? We had financial and real side globalization through the heyday of the gold standard, and it culminated just prior to World War I. But however, the financial crisis of the 1930s was a major blow to globalization. And not all of it bad, obviously, because we had the excesses of the roaring 20s in the financial industry that really are quite apropos to the discussion we've had here about the run-up to this crisis. However, what am I saying as it is relevant for today? I think right now, the advanced economies are all, in varying degrees, mired in similar problems. Big debt overhangs, public and private, big unemployment, dimmed prospects for growth. I think because of the common thread across the advanced economies, I think we are going to see much more of a concerted drive to deglobalize finance. And this is part of what John was also saying about heavier-handed financial regulation. Now, I do want to voice caution here. I hope it's financial deglobalization a la post-World War II, in which you had really highly controlled financial markets and global capital markets, but you actually also had pro-trade in real goods and services, as opposed to the 1930s, in which we had not just financial deglobalization, but deglobalization, period, punctuated by trade wars and currency wars and all kinds of things that with hindsight make one shiver. So, and since everybody was beating up on James, not everybody, but most people, let me beat on James too. I just want to say, you're a little cavalier here on your use of short term. This is short term. This is the 5th year after a crisis, and we're still talking about the years ahead. So we're really talking about decades now, you know, and I think the impact of big events such as what we've gone through on institution building or destruction is not a matter of a short run. What I think of short run, I really do think of business cycle. And this is beyond, we're beyond the business cycle here. That was just my own little pet peeve. Sorry.
Just one final comment on the globalization question raised by our friends from the International Labor Organization. I would commend to your reading, if you get the handbook, the chapter by Jeff Sachs, which addresses specifically that issue. And the punchline is the following: the next progressive era will need to be a global one, with a global awakening to the necessity of regaining regulatory control over corporate power, to tax high incomes, to close down tax havens, to coordinate the development of new industries. The agenda is large. The Occupy global capitalism movement, as he calls it, might be the starting point for a generation of change. So it's a provocative but interesting thesis. I think Jeff has done a very nice job in this context. So has Janet Byrne by putting this book together. Let me thank her again. Let me thank the 4 authors from the volume who joined us today and made very, very creative and provocative comments. Let me thank all of you for coming. I suspect this is an issue that will not go away. We'll have lots more discussions of income inequality and what to do about it, whether or not Occupy or elsewhere. That'll be a big topic on our agenda here at the Institute. Thanks to all. Meeting adjourned.